What's good, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades. I myself enjoy watching finance YouTube channels, watching stock market YouTube channels just as much as you guys. And the other day I logged on to YouTube. I was about to upload a video and YouTube had recommended me a video that said, revealing my entire $20 million stock market portfolio. So I looked at it and I thought to myself, is this guy BSing? Is this guy full of it? Or does he really have a $20 million portfolio? I gave in and I clicked the video and I watched it. And yes, indeed, this guy had a $20 million stock portfolio. But I couldn't believe my eyes. The way this guy was investing was crazy. And in today's video, we're going to be breaking down the video that I'm referencing. The YouTuber that I'm referencing is none other than Meet Kevin. I'm sure you guys are familiar with Meet Kevin. He is a giant finance and stock market YouTuber. The dude has over 1 million subscribers. His videos get 200, 300,000 views each, and he's done very well for himself. In the real estate industry, I guess he's done very well for himself, and on YouTube, he's done very well for himself. But I must say, he's doing something all wrong with his stock market investing. And in today's video, we're going to be doing a deep dive into Meet Kevin's $20 million stock market portfolio. Let's break it down. All right, all my trader and investor homies, I'm here on the Meet Kevin YouTube page right here. He has over 1.17 million subscribers. He has a very big influence. And when I watched this video that we're going to be reviewing today, reacting to today, I couldn't believe myself. Homie has a huge influence. People look at his channel for investing advice. Whether he wants to admit it or not, he's having an impact on the way a lot of people are investing in the stock market, and I believe he's doing it all wrong and offering a horrible example to tons of stock market investors out there. So the first thing that I noticed about this guy is, why is he always wearing jackets inside? I know it doesn't really matter, but homie, you're indoors, you live in California, why are you wearing jackets inside? I just don't get it. You know those kids in high school, it was like 80 degrees out and they'd show up with like huge winter coats on? Those were the dudes that you needed to be scared of. So maybe I should be scared of Meet Kevin and not doing this video, but we're going to be doing it. We're diving into this video. All right, so here's the video in question. Revealing my entire $20 million stock portfolio. And there's some crazy stuff going on in that $20 million stock portfolio. Let's start from the beginning. I'm not going to play the audio. I don't want to get copyright strikes. And so yeah, we're just going to go through it. I'm going to show you my issues with Meet Kevin's $20 million stock market portfolio. So Meet Kevin has several different accounts. So we're going to go through each account and I'm going to tell you guys why I think he's doing it all wrong. Account number one, $203,000. So one of his smaller accounts has 3 stocks in that account. Apple, he has 4 shares of Apple. He has Tesla, 215 shares, and Zillow Group. He has 1 share. So he's done very well in this account. He has a cost average of, he has 200 shares of Tesla, and it cost him $12,000. Now it's worth $190,000. And just because you make money on a stock, you make money on an investment, you've made money in your entire account over the course of a year. I think over the course of this year, he's made more than $1 million. He's made several million dollars in the stock market in 2020. But just because you made money doesn't mean you're doing it right. And I'll tell you a little bit later on in the video, after we review his accounts, what he's doing wrong. So let's move on to the second account. Here he shows the cost value and the current market value of the stocks that we just looked at. Let's move on to account number 2. Here he has some Planet Fitness, I think, and I'm not sure what this second ticker is, but I think a total of around $400,000. Down there we can see. All right, so here we have another account totaling $85,000. He has 4 or 5 different tickers, and the biggest one is going to be, I believe, Tesla down here. He has Yelp, Target, Apple. Here's where it starts to get a little bit crazy. Okay, so this account, $100,000 in this account. Tesla, 100 shares. He bought it for $6,000. Right now it has a market cap of $100,000. And here's where Meet Kevin starts to get a little bit on my nerves. He says, if you have a really high conviction on a certain stock, then you go all in on that stock. That's basically what he says. And that couldn't be farther from the freaking truth, okay? You have to stick to your game plan, and you have to be diversified no matter how much conviction you have in a company. I don't care if you think this stock that's trading at $1 is going to be worth $1 million per share in 1 year. You stick to the plan. Your portfolio should be a pie, okay? And you should break that pie up into sections that if one stock goes bad, if this part of the pie right here goes rotten, the whole pie doesn't go rotten. So if you're really high convicted in a stock, you have really high conviction in one company, maybe you invest 10% in that company, but you should invest no more than 10% of your portfolio into one company. If you invest 30, 40% into one company, and then the rest of your portfolio is just really small pieces of that pie, then if that one company goes bad, you're in big trouble. Your portfolio is going to take a beating. And me, Kevin, could say, well, let's just finish up looking at what his holdings are. He's showing us an M1 Finance account, about $2 million, and he breaks down the holdings. And now he's showing us his big JP Morgan account, $14 million in the account. And I'm going to fast forward. Meet Kevin does a spreadsheet towards the end that shows the percentages of all of his holdings. Here we go. So we have the spreadsheet pulled up, and look at these numbers, okay? So they're all relatively small numbers, 0.34%, 0.19% of his portfolio in MVIS, NET, Netflix, 0.3%, NEO, 2.5%, relatively small numbers. And that's about 20 or 30 different stocks he has less than 1% in. And we just keep going down the line. And Peloton, he has a little bit bigger, about $200,000, maybe 1.5%. And then I saw something and it just blew me away and I couldn't believe it. Look at this. Tesla. Tesla right here, Meet Kevin, has $10 million, $10.5 million into Tesla, and it makes up almost 60% of this dude's portfolio. And this dude is telling people, if you have really high conviction in a stock, be like me. I'm a genius. Look, I put a bunch of money in Tesla and it went to the moon and now I'm rich as you know what. Don't do that. I got the Tesla one-day chart pulled up here. So Meet Kevin basically was loading the boat on Tesla, loading the boat all the way up. And guess what? Meet Kevin was right. Tesla's a great company. And Tesla, the stock price went to the moon. He made a shit of money. Okay, he made a ton of money on Tesla. But let's say way back here when Kevin has $1 million in Tesla, he has all of his money riding on Tesla. Let's say the autonomous driving technology that Tesla was working on, it came out that it's bad, and then cars all around the country started crashing when they were driving on autopilot on the highways. And Tesla had to recall all their cars, and the stock went from $100 a share down to $15 a share. Tesla crashes, right? It didn't happen, but it very well could have. Even though I believe in Tesla, I'm a Tesla bull, it very well could have happened. And even worse is Meet Kevin was talking about using margin, and he was basically saying if you have faith in a company, use margin, which is basically the broker will give you a loan and allow you. So if you have $10, the broker will allow you to buy $20 worth of stock. So Kevin was saying, basically, put all of your portfolio into your high conviction stocks, use margin, and hope for the best. And hindsight 2020, he looks really smart because Tesla went up and he made multi-millions of dollars off of that. But in reality, that doesn't happen all the time. And any smart investor will tell you, you need to be diversified. Treat your portfolio like a pie. So I got 2 pies on the screen. No, they are not boobies. They are portfolios, okay? Get your head out of the gutter. So this is Meet Kevin's portfolio. Almost 60% Tesla, and then very small pieces of the pie making up the rest of his portfolio. Very ugly pie, but that's Meet Kevin's pie. This is the right answer over here. The answer to the test is over here. Your pie should look like this. Very equal portions of pie, and then if you really do believe in a company, you're high conviction in this stock, You maybe can put 10% of your portfolio in that stock, maybe 11, 12% to be the max 12%. Your average investment should maybe be 3 to 5% of your portfolio, and then your high conviction investments, 10 to 12%. He's got 60% of a $20 million portfolio in one stock. I don't care if it's the best stock in the world. That is just not the way to invest in the stock market and be successful long term. Because eventually, Tesla will have a pullback. He needs to cut back on his Tesla, in my opinion. That's just my opinion. I'm not offering financial advice. I'm not telling you what to do, and I'm not telling Meet Kevin what to do. But how in the world is he not peeling some off up here and reallocating that into some other companies? 60%. Kathy Wood is one of the smartest investing minds out there. ARK Invest. She runs ARK Invest, and I got the ARK holdings pulled up real quick. And you guys may be saying, who is this guy? Who is this guy, Kevin from Touchdown Trades? He doesn't know what he's talking about. He has no clue about stocks or about investing. Well, Kathy Wood, there's no argument. She knows what she's talking about. And let's take a look. She was even criticized for going too big into Tesla. And she only has 10% of the ARK in Tesla. Look at this diversification. She has about 40 or 50 names in there. And the biggest holding, her highest conviction holding, is Tesla at 10%. Not 60%. 60% is nuts. And he can say, yeah, but I made millions of dollars. Okay, try it again. See how that works out for you, Meet Kevin. And it's really bad that he's telling people to do this. He's basically saying use margin and load the boat on one stock. You should do the exact opposite. You should not use margin unless there's some really crazy discounts out there. And right now, we do not have very many discounts. The market is extended. There's not very many good deals. There's not very many value buys out there. And I would save your margin, save your ammunition, keep the powder dry until we have a correction. Then you hit hard. But you still want to be diversified. You still want to keep that pie equal sections with your high conviction investments being around 10%. To conclude this video, I just want to say I'm not hating on the guy. I'm not hating on Meet Kevin. Dude is very, very intelligent. It's very easy to see that the guy is intelligent. He's amassed 1 million subscribers on YouTube. He's apparently successful in real estate. Before he ventured onto YouTube, the guy is intelligent. He's smart. But I just can't believe that he has 60% of his portfolio in one stock. And I can't believe he's telling people to throw all their money, all their entire account into one stock if they're very convicted on that stock. I think that is the wrong answer. The answer to the test is to be diversified. I hope you guys got something from the video. If you did, hit that like button for me. If you're new to the channel, hit the subscribe button. I'll catch you guys in the next one. Until next time, peace.